There's a lot that is trending this morning. And I'd like to open our show today with what majority of Kenyans are talking about online. And if you look at the local trends that we have today, Safaricom is trending, and we do know why they're trending. And this is why, because in the ongoing case between a Moi University student who was charged with publishing false information about President William Ruto. If you do remember, I was towards the end of last year where he allegedly published false images showing the body of one President, Dr. William Ruto. Safaricom admitted in court that a mobile service provider disclosed the details of a Moi University student charged with publishing false information about President William Ruto. Now, this is why that particular case is trending. Because before they release any information about you, you need a court order. But in the build-up to that case, there was no court order that was guaranteeing or allowing the release of that private data of that particular student. So from the get-go, that was a breach of private data. And it goes against what the private data laws in Kenya state. All right? And that was actually Okiom Tata against, if you do remember those cases, yeah? It was Okiom Tata against the state. That was last year when the court ruled that before any other person gets access to your private data, they need a court order. There was no court order. Now, this is what Safaricom is talking about this morning. Now, Safaricom notes various conversations regarding data privacy and sharing of customer information with security agencies and other third parties, and wishes to make the following statement. Now, this is what they're saying, that they respect the customer's privacy and adhere strictly by the country's data protection laws, and as such, they do not share any customer data unless explicitly required of them via a court order. That information purposes a customer's call, data record, or CDR, does not show any live location and movements of customers, but are generated after a call is terminated and for the text messages once they are sent or received, and this is for purposes of billing only. That in July 2012, Safaricom onboarded Neuro Technologies to implement a fraud management system, FMS, on all our business lines, including our mobile money system. Neuro Technologies is a global brand operating in over 30 countries, providing support to telcos and utility companies to prevent and detect fraud with no third-party access. That is according to Safaricom. And by the way, this statement was released in 31st of October 2024. Now, if you follow closely then those admissions in court, then it will go beyond saying that indeed there was a data breach right there by Safaricom. All right? All right, let me then see what majority of Kenyans are talking about. I'm going to read one response here by Willis Evans Otieno, who's saying it's now in public record beyond reasonable doubt that Safaricom PLC has operated outside the law by enabling unlawful surveillance, breaching personal data, and collaborating in state intimidation. Safaricom has crossed from being telecoms provider into being complicit in systemic abuses. These are not just regulatory breaches, they amount to corporate criminality under our constitution and international human rights law. A company that profits while abating violations of privacy and security is not a service provider. That is according to one Willis Evans Otieno this morning. With the response here by Wanjiku reports that Safaricom disclosed the personal data of David Mokaya, a university student accused of publishing a post claiming that the body of William Ruto was leaving Lee Finro home. The information shared included his phone number, all records and call records, SMS messages, location, and ID, all without a court order. Interesting submissions on these ones as well. That's how we start this morning. That indeed, even as that case court continues, Safaricom might have admitted that indeed they gave out this information to this criminal investigation department, that's the CID, without the CID serving Safaricom with a court order to enable that data then to be given out. I mean, this data is the one that enabled the CID to go after Mokaya and charge him with this particular one. It's going to be interesting then to see how this one goes on to conclusion. All right, on that note then, let's also take a look at what it is that you're waking up to this morning in terms of your dailies, and I will jump directly into the Daily Nation this morning so that we see exactly what it is that you're waking up to. Let's see the top stories here. It is a race against time. That is what the Daily Nation is talking about this morning. Here's the thing. They're looking at some of the promises that President Dr. William Ruto made to you before assuming office. And part of those promises are the ones that are covered here by the Daily Nation. And they're talking about how he's now racing against time to make sure that he delivers on them. One is on agriculture. That's what they're talking about. Transform 2 million poor farmers to surplus producers. Housing supply 250,000 new houses per year. And by the way, if you listen to the interview by the CEO of the affordable housing program, they're saying that they already have 1,400 units complete. All right, the promise was 200,000 houses annually, or units annually. So it's only 1,400, 3 years into his tenure. All right, he only has 2 years to deliver. What is it? Is it 600,000? It's going to be interesting to see how he gets close to this healthcare. A publicly funded primary healthcare and comprehensive insurance. Education, bridge teacher shortage gap of 116,000 and raise school funds. On gender, achieve the 2/3 gender rule in a public positions. That is still one that we need to see whether it can achieve it. Women provide free sanitary towels in all schools and public washrooms. Establish public inquiry into state capture. Timely transfer of shareable revenue to counties that is under devolution. And human rights and extrajudicial executions by security agencies. Complete all roads under construction. Create jobs and scrap harsh taxes and boost incomes. Manufacturing, boost the manufacturing share of economy. Those are the 12 that are on focus by the Daily Nation, and we're going to see exactly whether some of them are achievable. Do you think that they're achievable? Because if we only have 1,400 complete housing units under the affordable housing program, the promise was 200,000 annually. Yeah. Interesting. The 2/3 gender rule. In fact, we did see the president form a commission that was supposed to advise him on what he's supposed to do to achieve the 2/3 gender rule. That has quietened immediately after the formation of that commission. It's up to you. Do you think that the president is going to meet all his promises before his tenure expires? I'll talk to us at Look Up TV across all your social media platforms. Now, the That story has been covered on page 4 and 5, and this is the kicker to it, that with the general election less than 2 years away, President Ruto faces mounting pressure to deliver on the lofty promises in his party's manifesto, while addressing grievances against his administration, including a deteriorating human rights record and runaway corruption. And they say the clock is ticking, and indeed the clock is ticking. On page 7 this morning, Gachagua 2027 Kingmaker or going for crown. That story has been covered on page 7. And some of the statements that have been coming from Gachagua is saying that he's listened to the cries of the people of Kenya. And what the people of Kenya want, according to him, is that he becomes president in 2027. All right, that's the story that the Daily Nation has this morning. Is he a kingmaker, or is he actually going for that crown, even as alliances now keep on forming towards the 2027 election date, by the way, which is just, what, less than 2 years away? Yeah, because we're jumping now into 2026. So in 2027 August, we're getting into the polls, yes? And you can see a lot of campaigns have started across the country. All right. On page 10, relief for teachers and civil servants on disputed allowance. That story has been covered on page 10. And we've covered some of those news here on how some teachers also got the shocker of getting 126 shillings as their pay rise after deductions in the much promised pay allowances debate. Good. Let's cross over to the Standard this morning, and let's talk about it. It's a big story. It's talking about Billionaires League. All right, and there's a story that we also covered yesterday here, that was covered yesterday by the Standard as well. That President William Ruto rode to power on promises of uplifting hustlers, touting the bottom-up model as a cure for the struggles of ordinary Kenyans. But 3 years into his term, he appears to have abandoned that philosophy. While urging citizens to tighten their belts, he loosens the public purse by his own indulgence, spending 12 million shillings on a private jet to Addis, where schools starved of capitation and counties unable to pay staff. His taste for billionaire luxury lays bare a leadership that preaches sacrifice but practices extravagance. A big story right there has been covered on page 7. I'm pausing because if you look at the pictures that are being covered right there with President William Ruto, we do have Bill Gates, all right, we do have Elon Musk. Yeah, we do have Beyonce Knowles. That's the wife to Jay-Z, for those who know her. And we do have Meta CEO, Mark Zuckerberg. It's an interesting picture. You can tell us what you think about it. Yeah, he's got shades right there. He's now in that league, according to the Standard this morning. Interesting to really talk about it. When you look at how much it would have cost the president to fly to Addis, by the way, that's a regional flight, would have been a first class, would have cost him around 179,000 for KQ to take him and his entourage all the way to Addis and come back. Could have been what? About 1 million thereof. But then it went all the way up to 12 million shillings for a 4-hour flight all the way to Addis for the CS4 climate talks. A majority of Kenyans don't like it, yeah? And the Standard is the second day of covering that particular story. Good. Page 2 of the Standard this morning, there's also a story about how a city lawyer was killed in cold blood in Karen. In fact, I've seen majority of Kenyans also talk about that online. That story has been covered on page 2 of the Standard. Good. On page 4 and 5, you're going to read about how Hustler Fund digital lenders eat microfinance banks' lunch. That story has been covered on page 4 and 5 of the Standard this morning. Then quickly, let me see whatever it is that you are talking about online before we jump into our big conversation this morning. And I will start with Safaricom. We've already spoken about it this morning. Let me just pick one or two sentiments from Kenyans this morning about Safaricom. I can see Mark this morning, who is saying that the CA should also act on Safaricom's data breach. It is time all organizations in the country were led and ruled by law. That's according to Mark, and we do know exactly where this is coming from. This is upon the revelation that the ongoing case of that student who printed images on social media last year that purported President Ruto's body was coming from the Leaf Funeral. Turned out yesterday that the Criminal Investigation Department in the country got data for one Mokaya Awaga, all right, without getting a court order. And actually Safaricom did enable that. Let me also read one more on this one. Rasta was saying this morning, the guys at Safaricom and other corporates should be very careful. This is what happens to scoundrels in bed with oppressive regimes. Yeah. Finally then, let's see this one by Gidu, who's saying ignorance is not defense. This boy should sue Safaricom for 10 billion for damages caused to him. Yeah, and you should actually be following that case. It's quite interesting. Lawyers are really trying to define terms that were used in his post right there, which is now a defamation case, isn't it? All right, how this ends, whether the courts actually can listen to the lawyers and say the evidence that has been provided in court did not adhere to law. We're going to see exactly how this case comes to an end. It's been going on since last year. Good. Let's also look at some of the issues that Kenyans are talking about this morning. I'll not be mentioning about iPhone 17. We do know why it's trending also in the country. Now, I also see City Lawyer also trending here. And this is actually from that story that also been covered by the Standard this morning. A City Lawyer was actually shot dead yesterday when he was about in the country. Yeah. And seen a lot of Kenyans really start talking about why he must have been shot. But let me just read one or two tweets this morning on this particular one. And this is what Kenyans are saying. Now, the name has come out as Matthew Chalo Bobu, as a City Lawyer who was shot yesterday. And this is Martin who's saying investigations need to follow on what led to the City Lawyer getting shot, and we need to know the answers. All right, Christine this morning was saying if it's death in line of his work, then the government needs to move fast to get the family and the country answers. Finally, I've got Dan who's saying when lawyers are shot in our country, we should stand up in arms to investigate, because this doesn't send the right messages to the law in this country. Hopefully that's what you meant right there, Dan, by that particular message. Good. Nepal is trending this morning. We do know why it's trending. And iPhone 17 is also trending. We do know why it's trending as well. Like I said, I'm not going to get into that this morning. Good. Now that's exactly what it is that you do expect then to be headlining your day today. This morning, I want us to talk about Saccos and the economic realities of 2025 in line with that conversation. I want us to take a tiny breather. Once we come back, I'll be introducing to you very specific numbers that headline this particular industry this morning, or sector, should we say that. And once we come back, also talk about what are the real pointers then that would indicate a proper conversation into how our economy is faring on in a 2025 if you go by the performance numbers of the Saccos in the country. Let's get ready for that conversation. I'll be introducing the gentleman who's joining us for that conversation this morning. So for those who want to get learning, then get your pens and papers out. We are online and Look Up TV across all your social media platforms. I am at Kianke Simba. Once we come back, let's talk about Saccos and the economic realities of 2025.
Taarifa zinapochipuka na kutufikia papa hapa kwenye makao makuu ya chumba cha habari cha runinga ya Look Up, kwenye taifa, kwenye serikali, kwenye bunge, tunajitosa hadi kwenye sauti ya wenyeji ili kupata tu maoni ya wenyeji kuhusu masuala haya yanayochipuka.
Maana hii kitu inaenda kuumiza Mkenya kwa tax.
Hakuna kitu tunafurahia. Nothing. Absolutely nothing.
Sisi tunaumia, si ati tunaumia ile ya kiukweli. Juu maisha ni ngumu.
Na bila shaka tunapata maoni yao ili sauti yao ipate kusikika. Na watasema hili, waseme lile, watasema hiki na waseme kile, almuradi sauti yao ipate taa.
Mambo ya mafuta tena imekuwa ni changamoto zaidi kwa kila mtu wa bodaboda.
Uchumi ikikuwa stable, tunaamini mambo itakuwa sawa sawa.
Kwanza liko na ria wa boda, mama mboga nini. Hao sasa ndio wamefinywa zaidi mali.
Mtazamaji, hii ni bunge la wenyeji.
I recall the doctor telling me that day, he said, "Sarah, I'm sorry about what happened to you, but you see, life happens. You would have to learn to work with your hands, depend on your hands more."
And today, if you're going through anything that you do not understand, just call on this name, Jesus, and he will save you.
I realized I loved music when I was about 7 or 8. I used to puff my cheeks and play the 12-bar blues. Like I'd walk around the house doing like...
Why do we need the Holy Spirit?
I mean, if you look at what Jesus said when he was leaving, he said he is going and that he will send the Holy Spirit as our helper.
So God knows everything since the end, from the beginning, has a plan for your life. So to find that plan for your life, you must find God. When you find God, you will know the path for your life.
Save a Life is a non-profit organization that has taken the front line in transforming lives in the entire country. So far, we have transformed life of over 100,000 people through our programs, which include medical support, youth empowerment, street family program, feeding program, and climate change. Join us today as we transform lives. As we always say, service to humanity is service to God. Save a life, transforming lives.
Welcome back. In case you are just joining us, this is Look Up TV, but most certainly you are watching The Morning Drift. My name is Simba Elijah Charles Kiange. Let's jump into our big conversation this morning, where we're going to talk about Kenya's Sacco movement, which is one of the strongest in Africa, controlling assets worth over 1.5 trillion and is serving more than 6.5 million members as of 2024. with a deposit-taking Saccos mobilizing nearly 700 billion in savings and disbursing 900 billion in loans last year, Saccos remain a backbone of financial inclusion, especially for low and middle income households. Well, this morning we sit down with a longtime friend, right, Japheth Musau, who is a man with many years, and in fact, to put it together, with over 25 years of experience in this particular sector, that's the financial services sector, and also overseeing Sacco growth and a digital transformation. We'll unpack these numbers this morning, the opportunities and challenges shaping the future of Saccos in the country. Jeff, how are you doing, sir?
I'm doing great. How are you doing?
Happy to see you. It's been quite a while.
Yes, I'm happy to be back.
Yes.
Yeah.
Happy to have you around as well.
Thank you.
Let's jump into this particular conversation. I was looking at these numbers, which are quite healthy numbers. If you go back to 2023-2024, you'll find that Saccos recorded 758.6 billion in gross loans and 682.2 billion in deposits, and a membership in the country that went up to 6.8 million. Those are quite healthy numbers. But then when you translate this to what is in the country, also talking about a very big financing gap, how do you relate these very good numbers to what has been a problem in the economy, which is a very huge financing gap?
Thank you very much. Let me start by agreeing with you. The numbers are quite phenomenal,
yes,
showing us a pretty big sector of our financial services landscape. But like you rightly say, the question is, why isn't this enormous size translating to results and impact in the economy?
Yes.
We can look at it from several perspectives. The first one we can talk about is a systemic structural issue, which is about the asset liability balance. You find that Saccos have sticky long-term deposits, but most of their products are short-term. So this robs the customers the opportunity to access long-term loans from Saccos. So that's a gap that's already in the service provision in this sector.
Yes.
And also, Saccos lose the opportunity to provide longer-term lending products, which earn them more fees, more income. So you find, because of this asset liability mismatch, there are a lot of lost opportunities, both for the members of the Saccos and also for the Saccos themselves.
Yes, it's interesting you should say that. I mean, let's go back and look at beyond these numbers. What other factors would show us that indeed Saccos are contributing to financial inclusion in the country beyond these numbers that we're reading here?
I think one of the things we can look at is the penetration.
Yes.
They reach to the grassroots, to the smaller communities. That's one very big benefit that the Sacco movement has added to the country. They also have products which cater to the segment of the markets. They also get to enter into niches that the traditional commercial banks may not get to. Commercial banks tend to be a little bit more broad in their reach, but Saccos can go to even institutions. The bigger institutions have their own Saccos.
Yes.
That way they're able to serve their members of staff. We also have community-based Saccos. People come together on a common bond basis around a community, around a little market, and they form their Sacco. So in that aspect, we can see the impact of the Saccos that are evident beyond these numbers. So there are a lot of stories. There's a lot of stories behind the numbers.
Yes. As an expert in this area, when we even look at these numbers, membership of about 6.8 million, should you be worried? Because there's the conversation of the economy is banked, fine, but when Saccos are recording 6.8 million, and that's up to 2023, 2024, should that number already be in the double-digit figures for us to say the majority of Kenyans are starting to realize the importance of Saccos?
You're right, but when you look at this 6-point-something million. That means around 1 in 8 Kenyans are in a Sacco.
Yes.
That's quite good penetration. But I would agree with you, with the period of time that we've had Saccos, they should be having a much wider impact.
Yes.
Yes, maybe in the double digits.
Yes.
For us to say they've really penetrated.
Yes. What would you say would be the challenge for us not getting to the double-digit figures? Because Saccos essentially come in. When you look at even the interest that they charge on their loans, they've been known to charge very low interests. It's as if majority of Kenyans have not realized the importance of taking up Saccos.
It's true. If you look at it critically, people know that Saccos exist.
Mm-hmm.
Like I earlier said, there's this mismatch of assets and liabilities and the missed opportunities.
Yes.
Where you can only get a certain kind of funding from the Sacco, not wholesome. You see, the purpose of any business, and Saccos are businesses, is to attract, create, and retain customers.
That's it.
Now, at the point of retention is where we have the problem. If I cannot get a mortgage from my Sacco, if I cannot get a long-term small business loan from my Sacco, what members do is they join the Sacco, but if it's to buy a house, the aim is for me to save enough for my deposit. Then I borrow the deposit, take it to a bank who will give me the mortgage. Then my savings slow down.
That's it.
Or some members even eventually exit the Sacco because they went in with a short-term objective.
That's it.
But how can Saccos transform this so that they retain the customers they have by being a one-stop financial solution? So I think that's one of the issues that cause Saccos not to really penetrate the market as they should, because their products are limited.
Pretty much. Let's continue looking at these numbers this morning, Jeff. There are 357 regulated Saccos. That was as of 2023. And they were covering deposit taking and non-withdrawable deposit taking entities. All right? I mean, what structural differences most affect customers and sector resilience in this environment?
When you look at the regulated vis-a-vis the unregulated, as the Saccos now move into the regulated space,
yes,
you find them also now begin to find some bottlenecks. They have now gone to the big league, and rightly so. The regulators should be concerned that now they are becoming big, as almost what we talk of too big to fail.
That's it.
And they need regulations, they need checks. But what has happened is we have copy-pasted the regulations that are for commercial banks, brought them to Saccos, which are member-owned, but commercial banks' structure of ownership is totally different.
That's it.
And that has become a limiting factor. You look at the strict liquidity requirements and all these regulations which are originally designed for banks.
That's it.
They don't fit the Saccos. So you find as they grow, they become a little bit stifled. And some smaller Saccos may be tempted not to go into the regulation space, so they just play it small until I think we should come up with Sacco regulation which is tailored specifically for those Saccos. So you find there's that structural limitation in the regulated space.
Yes. But it's a good thing you should be talking about regulation that is tailored specifically to these Saccos that really want to grow within the broader band of regulation. I remember some time back when we had the accounting formula, that is IFRS 16 and 17, that was getting introduced in the banking sector, actually in the financial services sector. We'll see a lot of Saccos were affected in the way they were looked at. Is it ever possible to look at Saccos separately? And from what you're saying this morning, if you were to tailor a regulation for different Saccos, how would you segment Saccos? Going by the fact that, indeed, when you look at what they want to achieve, it can be clustered as just a lending entity.
And that's where the problem begins when you look at it as an ordinary lending entity.
Yes.
So the first thing is to just take the entire sector, consider it as different. But within the sector, there are also sub-segments, mostly linked to their size. Look at the size of the Sacco, and according to its size, according to its structure of the balance sheet, then you have regulations that allow them to play within their size, within their segment, in such a way that they are not constrained, they are not forced to adhere to regulations which are typical for larger circles.
Yes.
We have these models like in the UK, where they have tiered regulation, and you find that according to your tier, you're able to operate comfortably without heavy restrictions which would fit for a larger kind of an entity.
Yes. But that tier format, when you bring it into the country, I mean, we've seen it in the banking sector, we have tier 1 banks, tier 2, all the way up to tier 3 banks in the country. But even the regulation is also uniform from top to bottom. When we talk about interest rates, when we talk about banking lending rates, they are uniform across the board. Couldn't it be proper for just the tiers to represent the size of these Saccos, but then make the regulation uniform? Or would it be proper to say, these 357 regulated Saccos in the country, would they be forced to get into mergers where they would come to size to fit into a regulation?
Yes, that would be one approach. Yes. But what we would be doing is killing the segment that they serve. As they become bigger, and we've seen this in the banking sector, the bigger they become, the focus changes, and they don't value the smaller customer market segment that they were serving before.
Yes.
They tend to change. I would rather that each segment has its own regulations suitable to its size, so that we don't disenfranchise certain segments of the market. That's the risk of consolidation. Then they become too big, they're not able to reach to the grassroots. There's the beauty of the small Sacco, that you even know up to the MD, and the MD knows 50% of the customers. That human touch is necessary. When they become too big, then you find certain customers may be disenfranchised.
Yes. Would you say that, Jeff? Because the main aim for every business, because even these Saccos are businesses, I mean, the main aim would be to continually keep on growing, to control larger assets, so that it will be easier for even them to onboard more clients and make it easy for them to lend. The regulator tends to think that if that is the aim and the smaller Saccos are struggling, why can't you merger and form bigger Saccos, so that it's even easier then for you to extend facilities to your client base?
Yes, there is a case for growth, because the more you grow, your balance sheet is bigger.
That's it.
You're able to attract larger capital inflows. There is definitely a place for that. But that would work in the typical traditional financial sector.
Yes.
You look at Saccos, what are they? They're member-owned, member-funded. Their main source of funding is the customer deposits, the member shares, and the savings. So the structures and the kind of financing is a bit different, in such a way that where you have small and medium-sized Saccos, this can survive in that size efficiently if the regulations are made suitable for their size, for their purpose, and for their target market.
Yes.
It's not always, growth is not always good. You can sometimes become too big, and movement and maneuvering becomes difficulty.
That's it.
Yeah.
Maybe the next question will change the way you look at it. Because I was looking at the regulator's data, Jeff, that if you look at the asset concentration of these Saccos, the 377 regulated Saccos in the country, 357, sorry, to be specific, that 3/4 of that asset-based concentration is just owned by a few Saccos in this country. Then the rest of them, they share their quota. Would that change the way of thinking around this then, and say, well, if only 3/4 is owned by just a handful of them, then the small ones it wouldn't make sense for them to operate by themselves or to create laws that are just supposed to regulate these few ones. Why can't they get swallowed by these big ones so that we have a general regulation framework in the country?
What you've described is something very natural. Somebody called Professor Price did a research, and he said, you go to any sector, go to any market, go to any activity, you'll find that 50% of the productivity of that segment, that market, is attributable to the square root of all the units within that market.
Yes.
What it means is this concentration criteria, this concentration phenomena is typical of any market. So what needs to be done is not kill the small players, but provide an environment where they can thrive. Yes, support the big ones, have the regulation, because as they get that big, it means their impact is big. They're serving more customers. Their stakeholders have more to lose, and that's where they need closer scrutiny. But for the smaller ones, let them survive, because there's also a case for them.
Yes.
They also need to exist. They serve a particular purpose. So how can you enable them to survive in an environment where the big players are creating this market, coming up with standards and market practices that the smaller players can look at and copy as well, instead of killing or stifling them? Because, like I said earlier, if we do that, you find there's a certain segment of the market that will be disenfranchised. They will not be served the way they should be served. And you find these big players can also not reach certain last mile segments of the market. So for the last mile delivery, we still need these small entities.
Yes.
Maybe what can be done is, in the bigger platform, the smaller players can be linked to a bigger player in way of representation. I saw this in the financial services market, where banks have a clearing house. This is where all the clearing, daily clearing of obligations happens. But there's a smaller player here, because of balance sheet size, cannot fit in that clearing house. What do? They are represented on the big table by a big player that has the ability to guarantee the obligations. They know that this player will be able to settle any obligation on the day that it's due without any problem.
Yes.
So they can take up the smaller player and represent them on the big table, but the smaller player still exists as they are. They're still able to cater to their segment of the market without necessarily having them merge into the bigger entity. So it's possible, it's been done in the banking sector.
Yes. Does it complicate it further? Because my next question then is also just a get back to whatever it is that we're talking about. Because if you look at that data again, especially the 2024 numbers, you'll find that the smaller Saccos are also struggling to make a positive out of their core business. Their core business as a Sacco is that you're supposed to lend, and then after you lend, your balance sheet should actually be reading positive on your lending business. But then you find that majority of them are struggling to show any positive on their core business. And then we look at the other investments that they're doing, that's why they're getting something to bring back as a positive in their balance sheets. Could that also change your thinking then, that if these smaller Saccos are struggling to make anything out of their core business, which is lending, then maybe that should change the conversation? Because then your business model, as to why you're given that permit to operate, it's not showing anything, Jeff.
I hear where you're coming from.
Yes.
But I think the right approach would be, let's look at the root cause. Let's do a root cause analysis. And if you do the root cause analysis, you'll find out governance issues. That's one of the issues that we have, both in the big and the small Saccos. And the governance issues we are talking about is loan origination, loan appraisal, insider lending. These are the things that may be ailing both the big and the small Saccos. We saw one of the big Saccos failing.
That's it.
And that was a governance issue. And this also affects across the board. So I think one of the approaches that we can take to further support my point is to help the smaller Saccos with corporate governance, loan origination. All these disciplines will help these Saccos turn a profit. Because you look at the model, it's free deposits that they have, lending at 12%. They should be able to pay some dividend of some sort.
Yes.
But you find it's probably governance issues, management issues. So we can have programs which help these smaller Saccos come to speed in the area of governance.
That's it. Yes. And would you also say that competition for the banking sector, which has had to re-innovate and innovate themselves at a time where these conversations for the financing gap are really taking center stage in the banking sector, would you say that the banking sector is eating into the chunk that would have been taken by these smaller Saccos within the economy? Because if you look at some of the products of the banking sector, they're just a mirror, they're just a copy and paste of what you can get in a Sacco currently as it is today, especially at a time when we're talking about risk-based lending, where if you're a good borrower, a bank could even extend your credit at even 12% or even lower than you can get it in a Sacco, Jeff.
Right, right. So Saccos need to innovate, innovate fast. Like I said in the beginning, to have something more than just the typical 3 times of your deposit for 36 months.
That's it.
And it's all vanilla across. There are many products that they can come up with, maybe financing the green economy. So with a bit of product innovation, the Saccos can now begin to claw back their territory.
Yes.
And create within themselves a niche that caters to their customer.
Yes.
It becomes a one-stop financial solution, and then you'll find banks will serve their segment, Saccos will serve their segment without any entity eating into the other's space. But if you don't have product innovation, you find Saccos now begin to become irrelevant, stale, and that's why banks can raid their territory.
That's it. Let's look at that data again from 2023, 2024 specifically, where Saccos essentially experienced the fastest rate at which loans grew within that sector compared to the deposits that were going into that particular sector within that particular period. And in fact, generally, when it comes to Saccos, you'll find that loans are growing marginally higher than deposits within that sector. Could you explain how that would affect the businesses of Saccos within the sector?
Yes, it does affect the businesses of the Sacco because they are still operating the traditional model.
Yes.
Where they are relying on the member savings and share capital as the main source of their lending. And that limits their growth. That's a big bottleneck. And what Saccos can consider, especially the bigger ones,
yes,
is other sources of funding, like capital markets. They can issue bonds. They can go to the capital markets, raise cheaper long-term capital, regulation allowing, so that now they have more inflows of capital, and this will enable them now to lend to different needs of their customers, like mortgages, business loans, longer-term lending, so that they retain their customers, they become more relevant, and they're able to grow their balance sheet
yes,
much, much faster.
So from what I hear you say, that loans growing at a faster rate than deposits might not necessarily be a negative to the Saccos, Jeff?
Not at all, not at all. This is the concept of credit creation.
Yes.
So it depends on how you're funding that credit creation. And you find also the reason why that marginal gap is there is because Saccos are able to source funds maybe from the banking sector, but to a limited degree.
That's it.
So what we'd like to see is that loan book growing much, much faster, not trying to tie it to the deposit, because the deposit doesn't need to be the only source of funding the loans.
Yes.
So it's perfectly all right for the loans book to keep growing. Otherwise, if it doesn't grow, it means there's a supply gap. So what we have in the sector is not excess demand. The demand is justified. Customers have those needs. They're able to pay for them. They're able to pay for the mortgage. but what we have is a limited supply. So the problem we have is not excess demand that Saccos cannot meet. The problem we have is a short supply of funds to meet the members' needs. And as a result, you find members going externally to the banks and to other financial service providers to cater for their needs, while they would have just stayed within the Sacco for all their financing needs.
Yes. It's interesting that you should say that, because that data is not really stopping within the Sacco sector in the country. Because since I ever started talking about Saccos, every other time when SASRA comes in with their numbers, they will say that, well, if you look at the loans, they're growing marginally, they're way higher than deposits. Is it that is stopping Saccos from dipping into the capital markets just for solutions like what you're putting across this morning?
Yes, it's partial regulation. Regulation should come into place that now gives them the ability and the space to approach the capital markets, yes, and raise capital to enable them to grow. So we do need regulation to come in and provide that facility and that ability, yes, for the Saccos to source financing from the financial markets. So yes, regulation is part of it. Then there's also innovation within the Saccos. But another key thing that can help is to have a good lobby for the Saccos. Yes. Banks have the Kenya Bankers Association. Mm-hmm. Saccos need a similar body. I know we have Cusco, but Cusco now needs to be reinvented so that it becomes a true representative body, professionalized, where Saccos now have a table where they can bring in the regulators and have a candid discussion on the things that are ailing them, the opportunities they see, and the innovations that they should be allowed to make. Yes. So I think a credible lobby organization of the Saccos that includes everybody, that represents everybody, is something that we need at this point in order to be able to go into all these bottlenecks and hurdles and discuss them on a table and come up with solutions.
Pretty much. Guess what? I want us to take a tiny breather right here on the Morning Drift. We are still talking about the economic realities of 2025, Saccos and financial inclusion. Are you in a Sacco? What is your Sacco helping you with in terms of financial inclusion? Talk to us at Look Up TV across all your social media platforms. Once we come back, we're going to talk about how the rates of non-performing loans within the Sacco sector is also affecting just the growth of this particular sector. Once we come back right here on The Morning Drift, my name is Simba Elijah Charles here again.
People are there to belittle you. When people are questioning you,
if you don't move fast, of course, yes, you lose it, but then it's not us to push you.
But you do not know the God who has been molding me. What has he been doing to me?
The deep and mature conversations of empowerment for you with a curious mind and an appetite for oriented conversations.
I concur with what you're saying. You plan your finances, you can easily live without a debt.
An engaging safe space of free expression and truthfulness with an upheld vibrance, motivation and happiness.
So many children who are there, they are not living their dreams.
Join us for deep conversations with Zipporah Gashushe every Saturday from 8 p.m. The Deeper Conversations on Look Up TV.
Do you need a dose of hope? If so, you are in the right place. We think of ourselves around here as hope dealers, delivering truth, power, and inspiration to hearts and minds all over the world. If nothing else has worked for you, why not give the God thing a try? For it's in the presence of God that you'll find everything that you need. Amen.
is it for you to forgive someone who has hurt you?
How easy is it?
What are some tips, a person can apply to improve their public speaking skills?
We all have personality lazy somewhere around us.
In my mind, whenever I'm invited for a public speaking event, I don't like to put a lot of, accessories or too many colors.
What are the major things to look out when choosing a school for a child?
Another cheesy conversation starter is, men do this a lot. They look familiar. Have we met before? No. We met in Nobody is buying that line again.
No, we don't. We don't buy it anymore.
Welcome back. You are watching The Morning Drift. My name is Simba Elijah Charles Kiage. We are still talking about Saccos and financial inclusion, sort of looking at the economic realities of 2025. And just before we went on break, I asked you a question. Are you part of a Sacco? What is your Sacco solving in your life in terms of financial inclusion? You can talk to us this morning as well. I'll be sampling some of those comments as we go on with our conversation this morning right here on The Morning Drift. All right, let's talk then about the NPLs within the financial services sector. And by the way, which we do know currently now, the official figures from 2024 stand around 625 billion shillings in the financial services sector. How would the NPLs in this sector affect Saccos differently as they would the banking sector, Jeff?
The non-performing loans, NPLs, are quite a thorn in the flesh, both in the banking sector, in the Sacco sector. But you find for the Saccos, especially the non-regulated ones,
yes,
there's no safety net. There's no guarantee fund which can guarantee the members should there be a high level of non-performing loans and there's a risk of the institution failing.
Yes.
So you find banks have this deposit guarantee mechanism, but the smaller Saccos don't. So in that way, the impact is much bigger. You also find that Sacco members expect to be paid a dividend every year. This only comes when the loans are paid back, the institution makes income, then they're able to pay the dividends. If there are a high number of non-performing loans, members are not getting their dividends, they get disgruntled, and they might think of opting out of the Saccos.
Yes, pretty much. Are there any steps that the smaller Saccos probably could be taking to mitigate this loan loss provisions that we're talking about this morning?
There certainly are, but one of the things that may limit that is the macro systemic effects that are bringing out this default. One of them is the squeeze in disposable income. You find most of these Sacco members may be in the lower strata of the economy, and when the economy is not doing so well, the disposable income where they get their member savings and also loan repayments getting squeezed because of economic situations, then these non-performing loans keep on rising.
Yes.
But also another thing that's affecting is the employers who are also not remitting member deductions.
That's it.
We've had that with the universities, with the big institutions,
yes,
governmental institutions. That has also greatly contributed to these non-performing assets.
Yes.
But also maybe the underwriting. Underwriting is the way that the Saccos assess the credibility of the members in order to advance them loans. So if that is weak and a member that is not able to pay is given a loan, or what you can expect is at the end of it, they'll default. It's just a matter of time.
That's it.
So if those issues can be taken care of, maybe from the economy side, see how members of the public can have more disposable income, then rein in these defaulting institutions that are not remitting the members' contributions, and then also see how the loan underwriting can improve. This is an education issue, educate the Sacco officials. How can they better assess the credit worthiness of the person that's coming to borrow?
Yes.
So that besides them, yes, being guaranteed by the other members, because there's that mechanism of co-guaranteeing, but also do they have the ability to pay?
That's it.
Those can really help.
Yes.
Yes.
I like the way you mentioned, because we don't know how the model for Sacco works. You can't get a loan if you're not guaranteed within the Sacco. But then it's interesting how they would have this high rate of defaulters, when at the same time within the Sacco system, which you can't get in a bank, when a bank gives you an unsecured loan, I mean, it's you and the bank. But then you come to the Sacco, within that system, for me to take a loan, I have to have a guarantor within that system. So we say, when you look at it, you would think that they're well shielded from defaulting, but then they're not, Jeff. Is it that the guarantor system is also not working within the Saccos? What is it? What's going on in that? I mean, you would sit here and try to think and say, well, they would have the lowest defaulting numbers because of the guarantor system. Is it not working?
It is and should be working, but the
Yes.
limitation is it's a process. It's a process for you to get to the guarantors, and that takes time for you to recover from the guarantors.
Yes.
And the implication is, should you recover the guarantor's guarantee, then what you're doing is you're also reducing your deposit, your savings base, because guarantors' funds, you're just taking from what they've saved, pay up the loan. That process, number one, takes time. Also, Saccos may be hesitant to resort to that because it has also an impact on the balance sheet. Try to pursue this member to pay before you finally attach the members, guarantors of this member.
Yes.
But you also have a time limit for that. Then if you surpass that, or if the member or the guarantors have a contestation, there's the body where you go to and there's some mediation.
Yes.
The tribunal, and the tribunal process takes time.
It does.
For it to be resolved.
Yes.
It's like a court process, and there have to be witnesses and all that. So by the time you get to the tribunal, that also takes time, and in the meantime, the loan is getting bad. So on paper, the guarantor system should be working, but clearly, from what we are seeing, it's not working because of those gaps.
Yes. Is it possible for the Saccos, as we do know, and I keep on borrowing from what is happening in the banking sector, when they approved the risk-based lending, when they're saying, look here, we will not say no to giving you a loan. In fact, that was the entire convince that they brought up with. They said, we will not say no to giving you a loan, but we're going to look at your credit history and know at what percentage in terms of interest we're going to extend this facility to you for, where you find that you're in the same category. It could be a teacher, and the teacher is getting given at what, maybe 14%, but because I'm not a good borrower because of my credit history, I'm taking it home at around 18, 19%. Do you think that might be the magic bullet also within the Sacco system, where they're saying, well, I mean, if the guarantor system is not going to work out, can we recoup a little bit out of this credit that we're extending to our borrowers by just increasing the interest rate going by their credit history? Can that also start working out for them? Because it looks like it's giving solutions to the banking sector.
Absolutely. That will definitely help. So we can have like a hybrid where you still have the guarantors. They give you some comfort that this borrower is known to other members of the Sacco,
yes,
and they're comfortable to guarantee them. But then we need education, both of the members and of the institutions. So as the members are guaranteeing their fellow Sacco member, what does it mean? What is the implication of you guaranteeing? I found in many situations, people didn't know that guaranteeing means guaranteeing. If the member doesn't pay,
you got to start paying.
You get attached and you got to pay.
Yes.
Guaranteeing means guaranteeing.
Yes.
So this member education needs to be made so that members are aware. I have seen members that are aware. They say, yes, I'm a guaranteeing, but only up to this amount. They state the amount.
Yes.
Beyond this amount, I'm not comfortable to guarantee this member. There are some Saccos that allow you to do that. Or there are some Saccos that will send you a notification before the loan finally gets approved that you have a guaranteed member X.
That's it.
Do you agree? You tick, and then that guarantor is accepted into the system. So this member education. But the other most important one, education of the officials of the Sacco in loan underwriting. How do you assess? How do you do the credit rating and credit assessment? But also to be aware of the credit referencing system that we have,
yes,
the credit bureaus. And many Saccos are not reporting. So to get them into this reporting and also accessing their members' credit score and know what is the implication of this credit score. So we already have the mechanisms. It's just a question of education. The members and the Saccos to be aware that these facilities are there. You can be a member of the credit bureau and you can access that member's credit rating as reported by other institutions. And also as a member of the credit bureau, now you can also report the defaulters, the good performance, so that it contributes to their credit rating. And that results in a benefit for the entire financial services sector.
Pretty much. Good. Let's move on to another area where I want you to speak directly then to the Saccos. Yes, you are speaking to them this morning. You'll find that despite the growth that we're talking about this morning, Sacco membership still covers less than a third of Kenya's adult population. No wonder we were talking about the single digit figures, which is also reflected somewhere, by the way, the insurance sector in the country as well. It is struggling for the penetration to go to double digit figures, all right? Now, how can Saccos convert account ownership into saving and borrowing trends? Is that a thing that they haven't really figured out? On paper, for us to understand the importance of Saccos, we do know how important they are. And this is a question that I also want you to speak to this morning, where somebody told me yesterday that if you are in a Sacco, you are in a Sacco to get a loan. So join in, save as fast as you can, get to that level where you can get a loan and take a loan. That's the only way that you're going to feel that you're reaping the benefits of being in a Sacco. Can we approach those two questions this morning?
Yes. For this growth that you're talking about to happen, there's a need for innovative thinking, so that Sacco members see the Sacco as a vehicle that is more than just a place to save and get a loan, to set a target and get a loan. There are many other products that Saccos can come up with, both on the liability and the asset side. The liability are the savings and deposits. The assets are the loans that they make. And one of the things that can spur this membership in the Sacco movement is, number one, coming up with products that cater to the wholesome financial needs of their members. And one of the ways to do that is to come up with even deposit products that make the members stick with them, not because simply they want to borrow. I'm talking about deposits that are longer term, lock-in deposits at a higher interest rate.
Yes.
They can also sell categories of capital, shares. They can sell categories of shares that members can put in, and shares are non-withdrawable. And this can give the Saccos more capital to work with, and then in turn now begin to innovate on the side of the liability and the asset products as well. So in the asset products, we're talking now of the longer term loans, loans for specific like green products, solar lighting, solar irrigation, EV vehicles, all these green sectors of the economy. And if they can go into these sectors, then you also find they can locate partners who can help them access cheaper funds targeted maybe for affordable housing. And that's one of the areas that I understand now Saccos can be part of the affordable housing movement. They can become on lenders to their members if they are of a certain size. So if Saccos can hook into these upcoming innovative products, these needs of the moment, flavor of the month, if I may put it. Like now we're talking of the environment.
Yes.
We're talking of energy efficiency. And there are many people that are willing to on-lend funds specifically for those sectors because they're concerned about climate change and all that. So if Saccos can be aware of these sectors they can delve into, then that can help them to have more diversity, be more appealing to their members, and have more reasons for the members to stick with them for various needs that they may have.
So I hear you, it's all about innovation and education. Is that what you find lacking heavily within this sector?
Exactly. Innovation, education, all these things can enable the Saccos to be more relevant to their members, to be more versatile and have a broader offering to their members.
Pretty much, which then takes me to the next part of our conversation, where Saccos have been sort of pointed out as derailing or really trying to catch this space that is under digital innovation. Do you also find that majority of Saccos are still stuck on the brick and mortar way of doing business? We are Sacco, and traditionally, we do know the Sacco and Chama movement in this country. It was a traditional way of, accessing finance and trying to come up with financial solutions. Do you feel that they are stuck there, which means that they are facing a lot of competition from the digital solutions that are already within the Kenyan space? That probably, that is why we're still talking about just below a third of the Kenyan adult population attached to Saccos. Not that they are not financially included, is because they are attached or financially included somewhere.
You're very right to talk about this digital revolution that has been running for a while.
Yes.
And Saccos have been caught napping, they've been caught sleeping on the job, and they did not hook in, but it's not too late. There's still opportunity to partner with fintechs, but probably what happened is fintechs had their eyes on the banking sector.
That's it.
It's a bigger sector, it's more lucrative, it's got more customers, and they're likely to cash out faster. But as that gets saturated, I'm beginning to see now Saccos are also becoming targets of these fintechs. We have fintechs that are specifically catering for Saccos. So with that recent movement, we hope that they're going to become a little bit more innovative to enable customers access their services anytime, anywhere. And that's the beauty of innovation. We all have need for speed and scale. And if Saccos can bring this speed and scale in the way that they serve their customers, the way that they do their customer service, product innovation, product delivery, then you'll find, yes, they'll hook into the digital revolution.
Yes.
And by that way, remain relevant and more impactful.
2020, I would say from late 2019, the onset of the coronavirus, up to where we are right now, somebody would say those are 6 years down the line. If we are still talking about us not feeling the Saccos in the digital space, would you say that that's already a train that has left the station for the Saccos?
Not really. If we look at especially the AI age that we are in, has democratized everything. And has made it cheaper, faster, and more accessible. So they might have missed the bus, but the train has arrived.
That's it.
They can catch the train.
That's it. Pretty much. Let's move on to the next part of our conversation this morning. And it's talking about how Saccos are now increasingly interconnected with Kenya's wider financial system that is now exposing them to macro shocks. Let's talk about that. How vulnerable are Saccos to the banking sector stress? That every time something happens in the banking sector, then Saccos, which are sort of trying to chart their own story in terms of financial inclusion, they're also getting the stress. In fact, that's why when you look at the numbers for the Central Bank of Kenya, they've never really given us a separate report and said, well, the non-performing loans in the Sacco sector is this. They sort of group them together. The financial services sector, we are currently at 625 billion. Have the Saccos really failed to remove themselves from the banking sector in the country?
That's an interesting question. Should they or can they remove themselves? Because you find it's a financial market, yes, interconnected, interlinked, and at the end of the day, Saccos end up placing their deposits and using the banking system to enable their transactions, for you to get a large payment, which is a RTGS, real-time gross settlement payment, across to somebody from a Sacco. You still need to go through a bank. And what is happening is when banks sneeze, the Saccos catch a cold, and for a good reason, because they're intertwined. At the end of the day, they still need the services of the banking sector in order to terminate their transactions. What I think needs to happen is, like you stated in the beginning, the central bank as the market regulator should come up with a focused, dedicated segment to look at the Saccos, include them in their regular reports so that people can know what's happening, and also there can be that focus on the non-performing loans in the sector, growth in the deposits, because end of the day, these non-performing loans and growth in the deposits have an impact in the overall economic performance.
Yes.
So in terms of hooking them up to the rest of the sector, that's what should be happening,
yes,
not delinking themselves, but being more integrated in the system.
That's it. Also, just attached to that as well, in terms of the Saccos really trying to cushion themselves from the stress of the macroeconomics. If you look at the banking sector, I mean, even as we sit here today, they are so well cushioned that even the CBK has a special fund for any other bank that might find itself in stress. That at one point when a bank really is under stress, they do not know where to go and get this money from, so they can extend to the borrowers. The Central Bank of Kenya sometimes extends this money to these banks and tells them, when you're under stress, you come here, you take this fund, which is sort of like an emergency fund from the Central Bank of Kenya, and then you can use it then to cushion yourself within a period when you do not know where to turn to. But let's come to the Saccos in the country. I do not know whether they have any other area to turn to when it comes to their stress. The roles of SASRA are just under regulation and monitoring to see whether they stick within the laws and the rules. Central Bank of Kenya, it's under regulation and monitoring to see that these Saccos actually stick to the rules of operation. Is that something that is missing within that sector? And probably now the Saccos need to take that up and say, we need that as well.
Yes, there is definitely a gap there. And SASRA is also trying to come up with a facility like the banks have,
yes,
not only for when you're in distress,
yes,
but distress comes because of the day-to-day lack of liquidity. How banks are managing that? The interbank lending.
That's it.
The ones that have excess funds can lend to the ones that have shortage of funds overnight, and it's paid back the next day.
That's it.
And that fuels the economy. And the sector, you find there's no shortage of liquidity.
Yes.
So Saccos are also trying to come up with a similar, especially the regulated ones, so that there can be an access for liquidity. If you have that daily access of liquidity, you can manage to transform your maturities, to match your deposits and your lendings, and manage your day-to-day requirements from that facility. And what will happen is Saccos will be able to gauge each other, give each other limits across, and this now creates a mechanism where the peers actually credit rate each other. Because you find in the banking sector, I know from bank A to bank B, I have set a limit. I can lend them, but I can only lend them X amount.
That's it.
So banks will now, Saccos will come together the way banks have come together, create an inter-Sacco lending mechanism that will help the day-to-day liquidity. But now to come to the one that you brought up, when now there's distress, what banks have is like an insurance mechanism. It used to be called the Deposit Protection Fund.
Yes, yes.
Then they re-engineered it. Now it's a Deposit Insurance Corporation. So it has this insurance aspect of it. What the members are doing is they're contributing premiums to the insurance fund, should there be a failure in any one of the institutions that they cannot perform, then the insurance kicks in and the depositors are protected up to a certain ceiling. So there is need for that, and that will bring a bit more confidence in the sector, and people now will be able to commit more of their savings to the sector, knowing that there is a protection mechanism.
Yes.
There's an insurance mechanism. For the regulated ones, there's an initiative going on to that effect.
Pretty much. Good. Let's jump into another interesting topic in as regards this conversation is concerned. That's remittances and diaspora flows. It's a big area that the banks in the country have been heavily benefiting from. In fact, for the very first time, currently as it is, the remittances that we're getting into the country have beaten tourism, which is also quite a big honor for the country as well. So then the question would be, do you think that Saccos are also underutilized in handling diaspora remittances? And what proper steps can the Saccos start to take today to also take a big share of these remittances that are coming to the country, one thing that is really benefiting the banks?
That's a growth area. It's a great opportunity. If you look at, like you've stated, the remittances from the diaspora, they are a major part of the inflows that we are having in the economy. And one of the starting places we can have is maybe look at the regulation, and especially touching the bigger Saccos, because now they are essentially quasi-banks. They do everything that a bank can do, apart from what? Cross-border remittance, which is now the bridge and the platform through which they can access these diaspora remittances directly. Because right now what they're having to do is go through a commercial bank in order for those diaspora remittances to get to their Sacco. If they can be monitored, facilitated, and capacitated to be able to now directly link to external correspondent banks, be able to have this flow of remittances directly, and also partner with institutions like the MoneyGrams, the money transfer organizations, then they can be able to more efficiently tap into this diaspora market. So that's partly regulation, partly innovation, and I go back to the lobby, the industry lobby organization can really help to bring these Saccos together, brainstorm, look at an area like that, the remittances from the diaspora, and say what solutions are available for us, what mechanism do we need, then have a candid discussion with the regulators, come up with a framework, regulations, structures, and get it rolling.
Pretty much. All right, as we get close to at the end of our conversation this morning, I know you mentioned on non-remittances of employer deductions and government lapses that remain persistent challenges to the Sacco sector. Do you sort of feel that this is a challenge that is associated to only the Sacco sector? Are they normally given a separate treatment? In this instance, if somebody has a loan from a Sacco and someone has a loan from a bank which essentially will be the salary remitting bank to that employer, you'll find that in one way or another, a Sacco might be ignored in terms of remittances as a bank would be in this instance. Do you think that there's something that needs to happen in terms of regulation for a Sacco loan and a bank loan for, let's say, a government employee to be treated at the same level?
Yes, they should be treated at the same level. And I would start with the institutions that are not remitting.
Yes.
And have education on this, especially the boards, the governance, to understand when you deduct and you don't remit, to begin with, that's a fraud.
That's it.
So to educate them and understand that that should not be happening. So when you deduct, you should remit, and that's a question of education. But now coming on the other side, there are mechanisms that now we can use technology to stem this endemic problem. I go across to Uganda. They had a similar problem with the microfinance institutions.
Yes.
What they did, they came up with a digital solution where all these parties are on the same platform, so that when the employer deducts, it automatically goes to the wallet of the lender. There is no bridge, there's no parking the money in the paying party's bank account. Once it's deducted, number one, it directly goes to the wallet of the lender. Number two, the borrower gets an instant message confirmation that your deduction has landed to your savings or to your loan repayment.
Yes.
So there's already a working mechanism which we can borrow from, have all these parties on the same platform,
yes,
so that when it's deducted, there's no question of it not landing where it's supposed to go. And we already have the platforms. It's just a question of orchestration. Bring them together, connect them, and you have a solution.
Yes. As we're clear, and I want you to take a minute then to address this. When you look at the regulation environment in the country, as regards Saccos, do you think that we are there? And if you're to mention one thing, what would it be that is going to finally unlock the potential of this sector?
I like the regulation. It's a very good idea. What we can do to make it even better is to work a little bit harder and come up with Sacco-specific regulation. What we have done, we have taken bank regulation and copy-pasted it to Saccos, and this is leading to the bottlenecks that we're seeing.
Yes.
So my ask would be, can we have a regulation tailored specifically for the Sacco movement? And that will open up the opportunities, will remove some of the bottlenecks that we're seeing, and make it better and easier for the Saccos to operate.
Pretty much. Oof, it's a conversation that I would have loved to continue more and more, but you can imagine, it's been an hour. My director is telling me, Simba, get out of the studio. It's time for you and Jeff to step out. Jeff, thank you very much for creating time this morning to talk to us at Lookup TV.
Thank you.
Fantastic. Taking back to the time that he joined us this morning online at Lookup TV across all your social media platforms. Any other questions that you may have, guess what? We'll do it as we do it on a daily basis. I'll forward some of these questions that I've seen right here to him so that he can actually get to respond to you on a personal basis. Professionally, that is it. All right, for me, it's a goodbye. I'll see you another day for more conversations right here at Lookup TV. Goodbye and good morning.
We value your feedback and welcome your complaints about our programming and operations. Feel free to get in touch with us through